We all know that real estate has created more millionaires than any other industry on the planet. We also know that it has created a lot of heartache due to mismanagement, overborrowing, and just simple life events that happen to all of us. Welcome to the CashFlowPro podcast. My name is Casey Brown, and I am your fearless leader. And although we might be bourbon sipping and at times foul-mouthed Southerners, we will always do our best to be honest, straightforward, and due diligent with all of the information we pass along to you. Welcome to the show. Hey there, and welcome to today's episode of CashFlowPro, your daily real estate investing podcast and YouTube channel. I'm here today with Elena Neely of Andover Holdings. Elena, how are you today?
I'm doing great, Casey. Thank you so much for having me.
Absolutely. We're glad to have you, and we're glad to talk passive income. We're glad to talk mindset. We're glad to talk everything that comes along with putting these real estate deals together. But first of all, let's start off with a little bit of backstory about yourself, where you come from, how you ended up in the real estate business in general.
Well, we started in real estate doing pretty much anything from the very start. Doing rental properties, refurbishing it, renting it out. We kind of did the BRRR before it was called that. And we're building new construction townhomes, tearing the houses down, building new construction. And my long-term goal was to own a bunch of real estate rental properties, pay them off, get rid of the mortgage, and then kind of build a little monopoly with little homes to rent out. And at some point, once we were getting tired with dealing with not very landlord-friendly climate in Seattle, my husband came across apartment investing and tried to convince me and change my mindset about the whole long-term hold and looking into their return on the capital, because appreciation is great in Seattle. The prices came up, but then your return on capital is about 1 to 1.5%. You're happy if you break even on your rentals. And we started looking into passive investing first. We started working with apartment syndicators and kind of looking which teams are doing what, how they doing asset management, how they're working with their investors. And
Now,
we
you
invested
mentioned there in Seattle.
Yes.
Of course, we always on this podcast we have a discussion about at least once a month about California and New York and how basically anti-landlord friendly they are. But
Yes.
you mentioned breaking even, and I had a guy tell me one time when I was real young, he said, I can sit at home and break even. So that just begs the question, there's somebody somewhere up there making money or they wouldn't be doing it. So now maybe you know the secret, maybe you don't, but in these states that are so not landlord friendly, what is it a volume thing? Do they need more
In real estate investing, you're either chasing cash flow or appreciation. So our states are more appreciation based. So properties, for example, doubled in the last 5 years. But when you're purchasing property here, your cash flow is pretty much non-existent. You're happy if you're breaking even.
Okay.
Because
So you're just talking about breaking even on the cash flow part. Okay.
Yeah, so you're pretty much holding property longer term in hopes of the higher appreciation.
Well,
Yes.
what's the general consensus? Like, obviously you want as much as you can get, but let's say on a 10-year, if you bought something up there on a 10-year kind of a plan, what would the general appreciation be on some? I mean, because the appreciation's good, but then it's like some of these other places, it's really good for like 2 or 3 years, and then all of a sudden it's worth half what it was 2 years ago. So how do you ride those out, and what's the?
So it's very hard to give a straight answer because we have never just bought the house as is and then sold it as is.
Hmm.
We kind of did a combo of things together. We always followed kind of three rules. It has to be the terms, how you purchase the property, it has to be expendability option, and it has to be the location. So what we did with our rental properties, we bought a single family home on a lot, which is
Hmm.
zoned for multifamily or which is zoned for the townhomes.
Okay.
So what we did was pretty much all of our projects. We bought a house, lived in it for a while, rented it out, and then when the time was right, or when the time was to get the permits, because it takes long time in our states to get the permits for the construction as well. For example, our last project in Seattle, it took us 2 years to get permits. So you have to carry the costs and everything. So we rented it out and then we bulldozed it. And one property, we built 2 townhomes, another, we built 3 townhomes. And then the last one, we built 8 townhomes.
Now, is that in
So,
Seattle?
yeah, that's all in Seattle.
Because there's a
Yes.
lot of that going on in Nashville. Like,
Yes.
the thing is you might be driving down the road and you see a house that was built in 74, 74, 74 last year, 74, 74s, so I'm talking about age.
Yeah.
So you have
Yeah.
a lot of these houses that really stick out like sore thumbs,
Uh,
but they're getting the lots for, they're buying the lots, splitting them,
yeah.
tearing the house down, and then going from there. So it's real
We
pretty.
were passive investors in Nashville last 3 years. They bought a parking lot next to their community college,
Mhm.
rezoned it for their multifamily, and built a 70-unit apartments. And when they told
Wow.
us that they're going to get permits, including rezoning, in 2 months, we were like, no way. You show us. You can't do that. And sure enough, in 2 months, they was rezoned, permits approved, they broke ground, and they built it through COVID in 1 year. They built 70-unit apartments, rented it out, and sold it.
Well,
Yeah.
specifically speaking of Nashville, I personally know a few different people like that are friends of
Hmm.
mine that have gone through the rezoning process of specific pieces of property. And every one of them's hit a jackpot every time they've done it. But I think Nashville has really warmed up to this zoning change thing. And
Hmm.
so I think the longest part of the rezoning process was the notification of the neighbors and the time to object to the rezoning. And that's like 90% of the waiting time. So it's just unreal.
So
'Cause-
that's what time consuming is in Seattle because it's their community, and then you have to do the study of the light, and if your building casts the shadow on the neighbor, then you have to hug every tree, and yeah, so there's a lot involved.
I call that bureaucratic nonsense.
Yep. And then there's corrections after the corrections. So, anyways, but to go back to your questions in terms of appreciation, you can go like in 10-year period, especially if you also forced appreciation by using the zoning and everything, you can 3x, 4x your results.
But the only
So
wild card there, you can't go up on rents, right? Like you get the rent rate increases are capped, right? At like
yeah, so for
3%
the existing tenants, you cannot go higher than 10%. And then when,
annually.
yes,
Okay.
yes, after a year. So you cannot go higher than 10%. And then when people are applying in Seattle, you cannot check criminal background. You can only
Oh
check
my God.
credit.
Oh
Yes.
wow.
So don't get me started there. Yeah.
Wow. That's unreal because
So, yes.
now I
But
mean
yeah.
I'm to a certain degree I say, hey, if criminal activity is present, I mean, if criminal activity is like 5 years old, they obviously deserve another chance or whatever you want to call it. Criminal activity was last week. we got a little bit of a problem.
Yes, and luckily ours, because we had new construction, so we kind of have higher end
Mhm.
rentals, and we have a lot of people working at Amazon, Microsoft, Google,
So
Facebook,
when
and
you
all
build
that.
something like that and you rent it out, you just
Yeah,
set the rental rate and
yeah.
then come down to, like, you set the rental rate high, then you come down a little bit at a time to get somebody in there. Then that's when that 10% thing kind of locks in, right?
No, no. If you already have the tenant there and your rent is set at three, for example, you're renting the townhouse from me and your rent is 3,000 a month, I cannot come next year and say, oh, by the way, the market rent skyrocketed. And then you've been there, for example, already in 2 or 3 years and I haven't raised your rent. And I go, Casey, across the street, the units are renting for 3,500. I can't do that. I
Yeah.
can only go to 32.99 tops.
Yeah.
So the prices are higher, the rents are higher. So when you're going to buy the property as a rental in Seattle, you're looking at, I don't know, 700, 800 minimum. And then if you want to make it with their required down payment 20 or 25%, you're probably still not going to break even when you look at your mortgage payment and taxes
So
versus what
essentially,
the
you're
rent's not.
saying that all of this,
Yeah.
what we just referred to as bureaucratic nonsense, has led you to passively invest in deals outside of your home market.
Yes. So that's what we did. We sold, I think we only have this 1 8 unit left right now. And
Okay.
that takes more time than any of our passive investments.
Isn't that funny? Isn't that
And
funny?
we invested passively in about 20 properties, 20 projects.
Mm-hmm.
Mostly Texas, then there Nashville, we love Tennessee too. And we've done a couple in Arizona. They already went full cycle and sold. And in Florida. And then last year and this year, we're also doing active syndications as general partners. And we
Uh-huh.
did 5 projects last year. And then we just closed on one in Tomball, Texas, kind of North Houston suburb this year. Yeah. So, and their general partners are mostly Texas property, Dallas, Houston, Arlington, Texas. There is one in Augusta, Georgia, and then the new one is in Houston, Texas as well.
Okay.
So,
All
yeah.
right. So that kind of leads us down the passive investing side of questions that I usually ask. Okay. When
Hmm.
we get about every fourth or fifth guest we get on here is an active passive investor in deals here, there, and
Yeah.
wherever. And so I've had some very intriguing answers when I ask these questions, but the first question I want to know is what do you look for? What's the very first thing that you look for in a sponsor?
First thing I look in the sponsor, the character, and somebody
Okay.
I can do business on a handshake,
Okay.
and somebody I know will do the right thing when nobody is looking.
Okay.
I think the most experience we had in the last couple of years, and COVID included, how people deal with
Hmm.
their stress situations and with drama, because multifamily is really all about operations.
Yep.
It's about who the sponsor is, who they have on the team, how they steer all the problems, because stuff's always going to happen.
Yep.
You're going to have flood, you're going to have fire, you're going to have tree falling, you name it. It's all going to happen.
Well, and we're in a
Yeah.
it's basically to some degrees a service business. I mean, in any
Yeah.
service business has to have, you know,
And it's I would place sponsor quality, character quality over any criterias for the property because it could
and
be.
that's I run
Yeah.
across that all the time. And the first time I asked that question several episodes ago, um the lady said she said you're gonna want to crawl through the computer and choke me when I give you my answer. And I said, do okay, it can't be that bad. She said, I trust my gut.
And I
Huh?
said, I was like, and here I am sitting here, you know, we're talking IRRs and we're talking cash on cash and we're talking
Yeah.
this and we're talking that and all of this stuff. And she says, I trust my gut. And I'm like,
Mhm.
all right, so that's how and of course there's obviously that other stuff comes into play, but it comes into play much later in the process than it
Mhm.
does when somebody's just trying to figure out whether they can know, like, and trust you
Yes.
as a sponsor. So
Yeah.
it's very intriguing to me how some of that stuff works and the general, just like almost friendship games that are kind of brought to this business where
Yeah.
you hit it off, you like people ask questions, you ask questions, and then before you know it they're like, man, let me know if you have a deal, and then there you go, right? um it's so
Well, and
interesting.
yeah, and I want to be interpreted right too that with the character and liking, I don't think it's much liking as just having a solid character and business understanding and experience. So
Sure.
it's just somebody, and then you see, I mean, usually you have your impression of person right away
Hmm.
and what they preach, what experience they have, and how they structure. Are they all about, publishing books and promoting next property after another?
Yeah.
Or are they really staying in touch with their investors and communicating everything? Because I
Yeah.
mean, wrong, good or bad, it's just talk to your investors and communicate with them what's going on, what's happening, how you're dealing with everything, and how's your team involved into everything as well. So,
Yeah, and that's one thing that really we as a company don't like. We don't play with the communications. Like, our communication lines are open all the time.
yes.
And that has to be because, when somebody calls in and says, "Hey, I wanted to check on the status of project at 123 Main Street," we may not be able to definitively stop and give all the answers right then, but
Mhm.
when you say, "Hey, if you'll give us a little time, we'll get back to you and let you know kind of what's going on," or, "Hey, we're having a meeting on that next week. Here's the link."
Yeah.
And then
Yeah.
that
No,
kind of stuff.
there's nothing worse than the deafening silence on the other end.
Yeah, and
Yeah.
that's really big when it comes to and you think about people investing in, like, even residents of a community. Like, if you had just a single family residential community, those people are invested in that community and they want transparency, they want discussion, just much like everybody else does. Everybody else wants to know, they want to know what's going on, and not necessarily like be in the know of, hey, these are the potential, but just call and say, hey, yep, we're 80% full. We're renting
Yeah.
a unit
Mhm.
every other day right now. This is what it looks like. These are the projections. And then, but it's also, I will tell you, it's also much easier communicating when the market is trading up to
Mhm.
sideways,
Mhm.
right?
Yeah.
Because you have you don't have anything that kind of catches you from behind. But you let that market fall a little bit and then fall some more and then fall some more, and everybody's going, hmm, what do I call Elena and tell her today?
Mhm.
We just lost 10% or whatever. So,
Yeah.
that's where the true test of things happens, is when somebody calls and just says, hey, listen, we lost money today. I'm
Yeah,
sorry.
or we're
We're going
not
to
going to
do
be doing, yeah, we're not going to be doing distributions because we need money for this
correct.
and that, but it has to be. And I think it's always correlates in the communications with your staff, with the property managers, with the
Mhm.
tenants. I mean, people treat people the
Yeah,
same way.
and I'll be honest with you. I,
So,
I
yes.
actually, I actually just a few weeks ago hired a public speaking coach. Right
Hmm.
now, the reason I hired a public speaking coach specifically for me now, obviously, is to brush up on some speaking stuff and keep my mind moving in the right direction. But the benefit, that, like, the silver lining in the whole thing from a communication or from a speaking coach, is the
Hmm.
communication like it's the communication coaching, because that's your business, right?
Yes.
And sometimes I have a difficulty communicating the point I'm trying to get across, right? And so I just thought, well, okay, if it starts to happen more often, the busier you get. And I was like, okay, I need to get somebody over here that's going to just say, I don't want him to communicate for me, but I want him to help me keep my mind trained where we keep moving forward with the
No,
same.
it's wonderful, and it's exactly, you don't set the goals monetary. You set the goals to become the person who,
That's
achieves
right.
that and goes together with the growth of the company. So
Yep. That's cool.
otherwise, yeah, otherwise it's not going to follow. And yeah, I think
Yep.
this, you're doing exactly
It's the
right.
apple. It's the apple theory, or the Schultz theory of, like you're like those guys were never motivated monetarily after a certain point.
Mhm.
They're motivated by, hey, how well can we do this, and how well can our users translate the message we're trying to send out. So
Yeah,
it's
and
very
it's not
interesting.
how much you make, how it's who you become, and money will follow.
Yes,
Yes.
ma'am. That's exactly right. So, all right.
Mhm.
Well, let's talk a little bit. So actively right now, what do you have going on, and what are the projections? Because as of recording here, the end of September ish, um, interest rates are on the rise, which is creating a moat of sorts between buyers and sellers. You've got sellers that want 2 day ago prices. You've got buyers that want 2 day from now prices, and their relative spread between the two is kind of continuing to grow a little bit, which is going to
Mhm.
increase hold periods. But what is the climate of some of the deals that you're actively in right now, and what do you foresee if any of those do become exits? How do you foresee looking for something new?
Yeah, so we involve kind of in all aspects because I also have my own real estate brokerage here in
Hmm.
Seattle. So I
Yep.
work with buyers, I work with the sellers who still thinks it's spring of 2022, and the buyers thinks it's already 2008. So, and then you kind of in the middle trying to adjust expectations of both sides. And with the multifamily, I can't think of any other industry or better area to be in because the rents still will be hedged against inflation.
Hmm.
And unless you purchased the property 2, 3 years ago and you have your bridge loan due by the end of
That
this
part
year.
I think is going to be a little bit of a challenge for a lot of places, for a lot of people here
Yes,
coming up.
yes, and
And I
the
think
things
that's
are
going to be
already
a
coming.
equity vacuum, is what I'm going
Yes.
to call it.
Yeah, so and there are already some of the properties with poor operators who are seeing some drama going on and some capital calls happening. We haven't seen it in any of ours because we've been underwriting everything super conservatively. And as a
Mhm.
matter of fact, the rents are looking good. The last property was purchased is at 96% occupancy, and everybody is paying their rents. One of their C properties we bought, there is some struggle for the tenants because the costs are going higher. The inflation is here, and they're struggling paying rent.
Yep.
But the property management's been working out with everybody on the payment plans or adjustments or going from a bigger unit to smaller units. So they're working on that.
Well,
So
and that's where
with,
your
yeah,
property manager is going to earn their keep too.
yes.
Everybody thinks property management is just about changing light bulbs. Well, the T's:
No,
toilets, tenants,
no,
termites, trash.
exactly.
But in
Yes.
fact, they're again. It almost becomes, well, it doesn't almost become. It becomes a service business. It becomes, hey, we
Yeah.
want you to stay. We want to make you happy. We want to help you
Yeah.
do
It's
that.
all relationships. Yes. Everything is relationships. And then we're really seeing on a couple other properties, we have a property management company who is handling 2 or 3 of our investments, and they're able to kind of manage the economy on scale and use the same company or order in bulk orders for the unit renovations. So you kind of have to become a little bit more creative. It's not in the good market, everybody can pull it off. Even turkey flies in a hurricane, right? So,
That's right.
so
Yes.
now it's like, yeah, the tide will show.
Hi, this is Casey Brown, host of the CashFlowPro podcast and YouTube channel. Have you been thinking about investing in real estate but just don't know where to begin? I'd like to help by inviting you to check out our website at www.3000capital.com. There you will find an array of material that will help you learn all about real estate syndication. And while you're there, be sure to check out our free video series download titled 5 Must-Know Keys to Success in Passive Real Estate Investing. I'd also like to personally thank you for making CashFlowPro part of your day. Now, back to the show.
It will. It will.
Yeah.
And and I think you're going to start seeing some alternative asset classes start sticking their heads up too.
Yes.
Some service asset classes. I have a buddy of mine that runs an ATM fund. I have another buddy of mine that runs a billboard advertising fund, like where these things are invested. You're invested up front on a depreciable asset. You're not looking at an exit, but some of that stuff is going to generate the cash flow. Now, the other part of that too, you could start seeing some money start folding back into some CDs and stuff as interest rates
Mm-hmm.
climb. People want the security of a bank CD or those kinds of things that in the past have yielded like virtually
Yes.
nothing.
There's,
And
yeah, there's gazillion ways to make money. As we navigate and learning more and more about everything, it's amazing. We just been really focusing on the multifamily because we understand it, we know it really well. We've had a good experience, and we kind of have partners
yep.
who's already been doing that for a long time. And if I were looking into other options, I would just look for somebody with really good record and experience, and that's what they're doing. But yes, it's been interesting to see how people who really done well before now just maximizing all the resources and making it work. Yes.
Yeah, yeah. And as long as I feel like pref payments stay 6% plus on
Mm-hmm.
the LP side, I think that's gonna kind of hold off the alternative investments at least for a while.
Mm-hmm.
When I talk about alternative investments of like CDs and some lower yield, higher security stuff, bonds, and then you're going to start having a lot less banks hedging interest rates with the markets and so on. So anyway, I don't want again the technical talk stuff is not what people find relationship building, but so what's the plan? What's your short term like 6 month plan as far as now? You said you have a real estate sales business as well. Do you mind to tell us a little bit about that? How the sales have been in the Seattle area? I know that I've got some cousins
Yes.
that live in like Vancouver, Washington, and in that
Oh,
area,
yeah.
and they talk like it's just like everybody just it's just been blowing up. Portland.
Yes, I've been real estate broker for 18 years now and have my own brokerage. So I've
Hmm.
seen different markets and everything. It definitely slowed down. As I mentioned, their sellers have to drop the prices, but some of their price reduction activities don't even result in more showing. So at some
That's right.
point, it kind of becomes obsolete. And for some sellers who have 2.5 or 3% mortgage on the home, it doesn't mean that they have to dump it and sell it on a fire sale. So
On
some, yeah.
talking about the brokerage real quick, I've oftentimes thought, I wish there was a way we could put a massive billboard or hire airplanes to fly around with signs behind them above real estate agents who go in and hit that $100,000 commission bell. Like somebody goes in and sells a $1.5 million piece of property and they make a $90,000 commission on it or whatever, right? And then you'd be like,
Mhm.
hey, you need to passively invest that. Why don't you take that and turn that into an income stream, a forever income stream
That's
instead of,
that's my big mission now. I'm talking to a lot of real estate groups, real estate
hmm
brokers group right now, educating. First of all, I think that everybody should own real estate,
yep,
and especially real estate brokers. And at some point, they definitely have to invest part of their commission passively or actively at the beginning while they still have time to manage their own properties.
yep,
But eventually, they definitely should invest passively. There's a huge gap between people working in real estate and not being active investors or passive investors in that. But yeah, the market slowed down a bit, but people still have to move for work. People get divorced. People have babies.
yep, every
Um,
day, every day.
yes, for me, with my past clients and present clients, there is always something going on. People
Yep,
have their parents now who have to downsize. Their kids are going off to college. And lots of them are looking into purchasing a home and having their kids have roommates rather than paying for the dorm. So there is still, in any market, there is still ways to create wealth and build wealth. It's
yep,
just not a quick game. It's not overnight success.
yep.
It's not 10x in a year. I always say that it's a long and hard work, but it's worth it 100%.
Oh yeah. At the end of the day,
Mm-hmm.
you're able to ride up any inflation
Oh, yes,
increases, and you're able to ride up, not only are you able to ride up inflation increases, but you're riding it up with cash flow that comes along with it. So anyway.
yes,
All right.
yes.
Well, Elena, listen, I want to thank you first of all for being on the show today. We have a couple of questions we ask every guest that comes on. And the
Mhm.
first of those questions is, what is the best book that you have recently read or are currently reading?
So my most favorite book of all the times is Napoleon Hill, Think and Grow Rich.
Think and Grow Rich.
I can't stress enough. And then another one, I actually have it in my office with me all the time. Um, it's George Anton. I'm rereading it again, Debt Millionaire. I
Yep.
don't know if you read it. He has Banker's Code, Wealthy Code, and Debt Millionaire. It's basically educating. I read a quote just recently on Dave Ramsey's Instagram, and I like the guy, but he's always says, no, never have any debt,
Yep.
pay it all off and everything. And this really teaches you how to be smart about it and how to use that to build wealth and create financial freedom.
Yep.
So, yeah, Wealthy Code and the Banker's Code right now, that's the ones I'm rereading.
Awesome.
Yep.
Well,
Mhm.
that's what we're always after here is teaching cash flow. Like people don't
Yes.
understand, like, and especially people that want to be self-employed. If you want to be self-employed, that's one thing. But if you want to be self-employed and don't understand cash flow and the necessity of that replenishing money every month or every certain period of time, it's
Yes.
really
And
difficult.
with self employed, there is a trick there not to fall into creating another job for yourself,
Yeah.
which will own you and you will be perpetually
Yep.
have to be there. At
That
some
was my
point you need to, yeah, you need to set the goals and you need to be able to structure it so that you work because you love it. And there's only a certain amount of margaritas you can drink on the beach. Right.
That's right. I
It
like
gets
that.
boring there doing
Yep.
that thing. So I'm very passionate about just teaching people how to build the financial freedom, and then you can do what you love to do. And I
Yep.
bet you will continue doing what you're doing. You will just have more fun with it and do it in different parts of the world on your terms, on your time. And yeah,
Yep.
just
Speaking of
enjoy.
different parts of the world, next question is, what is a dream vacation that you have taken or hope to take?
So our our favorite spot is Hawaii. It's the
Hmm.
island of Hawaii. Actually, one of the properties we did 1031 exchange and bought a condo there. It surpassed our dreams. We just wanted a little tiny one-bedroom condo. So that's our all-time favorite spot to go to. Going there next
Awesome.
week.
Yeah,
Yes.
that's great. How much,
Yes.
just out of curiosity, how much does a little one bedroom apartment cost there?
So it was a one-bedroom dream, which cost about 500 to 600.
Mm-hmm.
But your Airbnb and VRBO it, and
Sure.
it's one of the probably the better markets to do that because you have your vacation rental year round. So and yes, absolutely love it.
Awesome. Awesome.
Yeah.
Good deal. All right, Elena, how can a listener reach out and get in touch with you if they heard something that resonated with them or something they'd like some more information on? How can they get in touch with you?
So the easiest is our email. It's info@andoverholdings.com.
Okay.
I am always happy to connect with people on Facebook, Elena Neely. And yes, but andoverholdings.com will have all our contact information and actually some of the projects we're already involved in and some of the
Okay.
investments we've done. So, yeah.
All righty. Well, listen, thank you so much for being on the show today. And listeners, as always, thank you for listening to the CashFlowPro podcast. And if you don't mind, please head down and smash that subscribe button and also leave us a review so that others may know what you liked about the CashFlowPro podcast. Elena, again, thank you so
Thank you,
much for
Casey.
being with us today. Thank you for taking the time. I know that you're a busy lady, and especially if you're headed to Kauai next week, because I'm going to try to see if I can't get up there and hitchhike along with you. So
Sounds good.
I don't know that a one bedroom would be big enough for all of us, but we'll figure out
We'll
something,
figure it
right?
out. Yeah.
All right. Well, listen, thank you so much. I hope everybody has a wonderful rest of the day.
Cashflow Pro is hosted by Casey Brown, founder and CEO of 3000 Capital, a commercial real estate investment firm committed to providing its investors with ongoing cash flow and helping them build long-term wealth. If you enjoyed today's podcast, make sure to hit that subscribe button so you'll be notified about all our future episodes. You can find more information about us and our investment philosophy by clicking the link in the show notes below. Thanks for listening.